The 2023 Union Budget is going to begin shortly, and right now it is the best time to analyze what are the core economic indicators that will be addressed in the budget this time. And the core economic indicators are as follows: nominal GDP, fiscal deficit, market borrowings, disinvestment, and finally we have capital expenditures. Come on, let's take a look at all of these indicators and see what is in store for the Union Budget 2023 and for the forthcoming year of 2024. Let's talk about nominal GDP. Nominal GDP is the value of all final goods and services assessed in the current market prices. India's nominal GDP as of 2022 stands at 273 lakh crore. The budget estimates, as per the details sent out by Ministry of Statistics, have projected a 11.1% increase when it comes to 2023. But more economists have come up with a realistic projection saying that the growth will be slightly lower at 10.5% now. Even if it is at 10.5%, the advantage you can see is that we will record 302 lakh crores by the end of 2023. Fiscal deficit. What is so special about this indicator? It talks about the difference between the total revenue and the total expenditures undertaken by a government for a particular fiscal year. And fiscal deficit has always been a topic of intrigue, amusement, and confusion. The Union government in its latest update have said that they're setting sights on a target of 5.9% of GDP. Fiscal deficit target set at 5.9% of GDP as part of its projections for 2023. And the interesting part is that with a nominal GDP growth rate of 10.5%, we can achieve 5.9%. And currently, the estimated fiscal deficit target is lower by 50 basis points compared to the earlier target of 6.4% set in 2022. If we record a nominal GDP growth rate of 11.5% for 2023-2024 projections, our fiscal deficit will reduce even more to 5.8%. In the recently released budget estimates, it has shown that absolute fiscal deficit score stands at 16.61 lakh crores. But the real projections show that it is way higher than this, 17.75 lakh crores. That is why an alternative target of 5.8 is also kept in mind so that the chances for the push for a higher nominal GDP growth are also kept alive. The Union government will also likely continue the long-term projections, keeping fiscal deficit as low as 4.5% by 2026. And let's see what we have more to learn about the next indicator, market borrowings. Market borrowings is a mechanism by which government can obtain a large amount of fund for its various activities, from investing in its PSUs to repayment of all previous debts taken from the public. And market borrowings work under a wide variety of techniques. One is treasury bills, and the other one is bringing in small saving schemes for the public so that they invest all the savings into it, and the government would definitely return the amount with an interest after a fixed period of time. The next is issuing bonds. Issuing bonds has a long-term validity, and at the same time it is giving more assurance to people over time, saying that the government will repay your amount taken, be it for 5 years, 10 years, or 30 years, with a market rate of interest prevailing at the time. We have seen that the government has borrowed 14.31 lakh crores in 2022 alone under the markup borrowing mechanisms. For 2023, it is going to be slightly higher as far as the projection goes, 15.5 lakh crores. This is quite high due to the fact that many of the government bonds that are valued at 4 lakhs and above will be maturing by 2023-24, and the government will need to repay all the investors who have invested in this particular bonds. So the borrowings will go higher on a gross term so that repayments can be done much faster.